All right, good afternoon, everybody. Event Trader here. I'm going to be joined by Brett Manning, chart trader, of course, shortly.
Hey, Gav.
Hey, what's up, Brett? How are you doing?
Doing pretty good.
Everything okay with the kids?
Yeah, they're doing amazing, actually.
Oh, yeah?
Yeah, they are
getting sassy?
around. We just got a triple stroller that they all sit in line, and they love it, and we take them out on these walks, and they just go nuts now, so they're happy. They're happy little kids.
Is it a triple going wide or length?
No, it's in line like a little bus.
Nice. So you're aerodynamic, too.
Yeah, oh, yeah.
Nice. So Scott had a funny line earlier where he was just talking about you having the doctor's appointment and stuff, and just said that pretty much sums up about how important this Fed meeting was when you decided to make a doctor's appointment without a care for the statement, and certainly seen that play out in the markets here.
Sure.
What's up?
I said, yeah, sure.
So I mean, I kind of went through my thoughts on it. I mean, there was a slight uptick in the language in it that, all it did was, I think, put a slam dunk and a nice little tidy bow on a September rate hike. Personally, I think that the Fed did a pretty good job. I know there was some talk about them maybe putting out a statement claiming their independence, which I just kind of thought was ridiculous. I mean, there's no reason for them to go poke the bear on a topic such as this.
No, but I will say that will happen in September at the press conference. There's no way around it. They'll get pushed into that by 10 different questions.
In the Q&A.
Yeah.
Oh, yeah. No, they will definitely push towards it. And we'll see it in statements coming up. We'll probably get it at Jackson Hole, too.
Oh, right.
Because, that's only going to be 3 weeks away. They still haven't announced a date for that, which I'm a little surprised. But that's usually the third weekend of August, so that should be coming up in about 3 weeks. And I guarantee that that's a pretty hot topic. And I was looking around to see who the first Fed member is up. Usually it's Williams, but I don't see anybody on the docket just yet. So we're not really going to get a lot
Trump.
He'll definitely be on there and stuff, but I don't know if he'd be able to break down the nuances of it. But we really didn't see much of a reaction. Like I was saying, we had a little bit stronger comments around the economy. It went from solid growth to strong growth, which is Fed speak for an uptick in the economic language. A little bit stronger commentary around business spend and things of that nature. And then the inflation one I thought was also a little interesting, because in the prior statement they had inflation for items other than food and energy have moved close to 2%. Now the language this time was at 2%, so a little bit of an uptick there. Balance, everything remained broadly balanced, and pretty much everything else was right in line with the prior statements. So again, a small uptick in the verbiage around some of the key areas, but I think pretty much a benign statement, and really just, like I said, ties the bow for a September rate hike. Was that your take from this?
Yeah, right. Like you said, they upgraded economic activity to a strong rate. Household spending and business fixed investment, strong growth. Inflation now remains near 2%, so basically sits at target, and didn't really spend any time on risks. So I think they were, doing the thing, and the thing to do is to drive the December contract of the Fed Fund futures just a bit up, because we've already got, they know that they can come out and do their thing in September, and they won't roll the markets. It won't be a surprise to anybody, and now they're just going to be going through the process of making sure everybody realizes this is a 4-hike year, and that means gradually driving that December expectation up in a manner where that's not a surprise at all. And once everybody's acclimated to that, I think they kind of feel like they've done their job.
Yeah, and I mean, as long as the economic data, we could even see it decline a little bit, I feel like, but as long as it remains steady and we don't see that big impact from trade. Now, I went through all those PMIs, and certainly it was noted a number of times, but it didn't seem to really be playing out in a lot of the hard data, and it certainly hasn't really. So, it's something that we'll continue to monitor. But there was some thought, I think Pat touched upon this in his recap of it, about maybe the Fed could put in something about protectionist measures, and they did not. And again, I don't think that they were looking to change the storyline. If that was something that they were looking to do, they would do that in a meeting, or in a press conference meeting, I think, because that would certainly change the tint of what they're looking at. But also, it kind of catch them in a little bit of a catch-22 because protectionist policies by nature are inflationary. So, what would the Fed do in that situation, I think, would be the key question. Probably something I'll be brought up.
I would say they are stagflationary. They're not inflation through growth, through increased demand. They push up inflation, and so from a monetarist position, that would cause them to act, but it's also at the same time something that can weaken the economy. So it's a little bit tricky for them.
Okay, yeah, I hear what you're saying. Well, yeah, and I guess that's the point. That would be a tricky thing. I wonder if that'll be a hot topic at Jackson Hole. Again, we haven't gotten any details on that. Well, I'm just curious. They usually have people directly addressing these in different forums. So, I'd love to see that being one of the forums. I think market's just certainly screaming for that. So, that's going to be something to keep an eye out on. But unfortunately, we're a little low on details there. So, I know I'm going to be breaking in with Scott here in a little bit, doing our normal day end, but I always cover the macro first, Brett, so I was going to see if you could stay on, just run down that with me, because I'd be curious on your take on a few of these things. But before we break into that, now I know you were eyeing up potentially a short for the NASDAQ. Never hit your stop, but you're certainly right in the direction. Or never hit your trigger, I should say. Does this change anything on your end?
No, I just want to see how
action.
No, I just want to see how the pattern plays out. Right now, I believe that just looking at like a 15-minute or 60-minute chart of the NASDAQ, I think it sets up for the possibility that we could see the flush above 7,300 again and give me the entry that I want, and then it will just come down to whether or not I believe the manner in which it gets there breaks the tone or mode that I want to see. So I'd like to see a sharp rally, particularly headline-driven, that breaks out and squeezes us up to 73.25, and I would probably short that.
I was going to say your druthers would certainly be headline-driven, right? Like a picture
I would like
Trump and Z high-fiving or something.
There you go. Something just like that. That will get me in that trade really easily because I know that everything is going to be suddenly slanted in my favor in terms of potential new sellers if it rolls over. So, yeah. You
going to be keeping a close eye on the AAII data tomorrow?
I've been watching it. It's never one data point for that one. I really pay attention to the 4 or 8 week moving average and look for it to really get, kind of clustered in an area. But the one thing that I have noticed lately is the robo ratio has started to kind of run up against some of these notions that people are underappreciative of the market. I mean, there's a lot of strength, I think, to the idea that the robo ratio is one of the most important medium-term sentiment data indicators.
So the robo ratio you're saying is going against your short trade?
No. It's going like it has flashed over the last few weeks. It has flashed into an area that suggests that there is too much speculation in the market, which helps the short thesis. So and that runs against things like if you look at the Bank of America Merrill Lynch Fund Manager Survey, the last one that came out a week and a half ago or so was very much pointing in the direction of that people were really defensive and that possibly that there was a contrarian long in the market. And I think that was really more about if you look at global equities and you look at a rotation into international and emerging markets. And I don't think that that's the case necessarily for the NASDAQ. And I also think that it's a little bit of more of a difficult read in that data point, because I think that we may have gotten to the point where that's become a popular enough device that people are gaming it a little bit when they give their answers. So I'm a little concerned about taking a face value approach to the fund manager survey at this point, because at this, now it's reviewed on Bloomberg and CNBC and in the Wall Street Journal and all sorts of things. And if I'm a big fund manager, I don't want to reveal my positions too directly, so or my biases. And I think that there's a chance that it's started to become something that can't be really interpreted in a face value manner, and that people will suggest that the things they want to buy are too crowded and suggest that the direction they want to go is a bad idea based on the data. So I think that giving away opportunities is now a consideration for larger fund managers participating in that survey. So I really kind of revert back to my bread and butter sentiment measures, and the one that has always been probably the most directly successful for me in a straightforward manner is the robo ratio.
Okay. Let me ask you real quick. Mike, commodities trader, just posted an interesting piece about Iran running some military exercises in the Persian Gulf. No idea on if that's a regularly frequent thing, but is that going to put crude on your radar for tomorrow?
So I got to familiarize myself with it. So we're saying that Iran is now amping up tension, essentially, in the Middle East?
I mean, that's kind of the take I'm getting from his post.
This is probably a reaction to the rebels in the Strait and everything.
Yeah, I would think so. So, I mean, obviously we're seeing a lot of activity picking up there between the Saudis and Iran.
Yeah, I mean, traditionally that would be looked at as a premium builds into the oil price. But, I mean, that news is out. The market knows about that. And
yeah.
It's not acting well.
Still haven't found any.
I'm not going to buy it after everybody knows that's happening.
Right. Yeah. No, I was just, but you would be interested in shorting it if it didn't bounce off it.
Well, especially since it can't rally even on this. Right? Yeah. So, I mean, that kind of reinforces the sense that the mode is wanting to be lower right now for whatever reason.
Okay. So let's take a quick look at the macro. I'm going to just thumb through a list of things here, Brett, and then circle back on the ones that I wanted you to touch upon. In the U.S., pretty quiet day. We got claims. That's a non-event these days in the markets. Well, the June factory orders, which certainly has a chance of being volatile, so that's going to be due out at 10 a.m. The briefing.com consensus at 0.6%. And then we got the natural gas inventories. That pretty much sums up the U.S. Not a lot of activity there. And on the international side, there are a couple of interesting things. For Japan, we'll get their monetary base out. We'll get it at 8 p.m. tonight. Australia has a trade balance. Numbers due out at 9:30 p.m. Expectations are for a surplus of about 910 million. And then we're getting into some of the more interesting aspects of that. And first, a UK construction PMI number, that should be a non-event, but we have 3 10-year bond auctions, one in Japan, one in Spain, one in France. We saw the German one come out with the basis points running about 11, with the yield running about 11 basis points higher here. A strong big cover. Is there anything you're looking at in terms of the bond activity with these 10-year sales? Hello?
Hey, sorry about that. Yeah, I just clicked on the mute. So I always follow, especially larger bond market sales, and I would say that, understand that it's all interrelated. When you look at yield on the 10-year, you're looking at yield on the 10-year everywhere at once, and there's a staggering. But that's all, that's all permeated by cross-border flows, and really the difference maker there, we talked a little bit about this earlier this morning, is just the cost of currency hedging. So that you're taking that factor out and you're looking for whether or not there is an easy way to make money in the simplest exercise that exists in the financial world today, which is borrowing from one person and lending to another. And the differential in rates defines the flows of the money. And the cost of the currency hedging defines the risk taking that. So it's all one big mushy system that just all flows together. It's like looking at the oceans. How much salt is in the Atlantic Ocean versus the Indian Ocean or the Pacific Ocean. It's all going to there's going to be an equilibrium there, but there's going to be little pockets and imbalances. But yeah, absolutely. Like the appetite for debt on that level around the world, regardless of anything else, is going to kind of flow together. And if there's a tipping point where we start to see, like we did in December, particularly, and in early January, we started to see a tipping point everywhere where rates just started to leak higher, and we saw the risk parity trade get blown up. That led to a blow up of the short VIX trade, and we had a market crash. So you can get that kind of domino effect if things start to go sour in terms of people's willingness to show up at these auctions and support them. And right now, I don't think of it as a factor. I don't think that we're likely to see that kind of tipping point, but you want to follow it. You want to understand if the numbers are matching up. So, I definitely think this is something to watch, but it's like sentiment data. It's important when it gets to an extreme, and otherwise, it's not really going to move much.
Right, just moving off those bottom lines that they've been kind of trailing upon for the last few years now at this point. But another interesting item out is going to be the Bank of England interest rate decision, where they're expected to hike 25 basis points here, expected to get 7 votes in favor of that. No changes to the asset purchase program, and then it will be followed up by Governor Carney speaking at 7:30 a.m. You got any thoughts on sterling here at all?
Not really. No, I suppose, if there's any commentary around Brexit and what risk they see there, but otherwise it seems like they've been kind of defining a target and hitting the target.
Yeah, so definitely, that would put pretty hawkish FOMC on for this week, a rate hike at the Reserve Bank of India, and a rate hike at the Bank of England potentially in a busy weekend. I believe also, I got to double check my times on this. I think we got Brazil out after the market closes today too, and let me double check that. I don't have that on my docket here, but that's one that I'll follow up with. But I think that they might be out after the market closes, and then also Mexico is going to be out tomorrow too. So that central bank activity is going to just continue to be busy, and really that rising yields going across the globe continues to take hold, and like you said, really works into the currency valuations, obviously, and also the use of that as a way to amplify your bets around the market. So just a real interesting time to see that rising tide lifting all boats here.
Yeah, and I would just say, just like, kind of, squint at the charts. Squint at rate charts. Don't try to get too precise at it. Just squint. Just see the big kind of crayon drawing and the big general direction. When you go through a period where all the central banks come out, look at, where we were 2 months ago and where we are 2 weeks from now, and just kind of see, that's the tide. That's the current that things are moving in. And sometimes it's down in rates and sometimes it's up. And it looks to me like, generally speaking, even as people are starting to hike, you ran off the list, it's not stopping longer term rates from moving higher, which means the curves are moving higher, and you're not at the point where you're at a cycle turn. And that's really the main thing. When you're at a point where you're at a cycle turn, the central banks will be tightening, but the long end won't be moving higher, and you start to flatten the curves. And so if you see long end able to go up, even as the central bank is a hawkish kind of player on that playing field, then you're not at the end of the cycle. And in the United States, that's exactly what we see. They didn't hike today, but the Fed came out and reaffirmed the path. 2 more hikes this year. 10-year, solidly higher. 30-year, solidly higher. You're not at the end of the cycle there. So things are still kind of just, moving along.
Yeah. And, we'll continue to follow the story as it comes out. But certainly as Muhammad El-Arian said a few days ago, the new normal is no longer the new normal, right?
Yeah.
But okay, so Brett, thanks a lot for joining. I'm going to bring Scott in. I mean, if you want to stick around and talk earnings, you're more than welcome to. But certainly appreciate your insight into the macro here.
You got it. I'll let you guys handle the earnings.
All right, Brett,
Thanks.
we will talk to you later, and we're going to switch you out, tag you out for Blue X.
All right, tag.
All right, take care.
All right, I'm it.
You in? You in? All right.
Yeah, I'm it. Yeah, they tagged me. I'm it.
So I'll tell you what, let's get to a little bit of order of business here with Trend Tracker buying a third swing along in Pluralsight, which is one of the names that we discussed with him on Monday. Pulling up this chart on that one right now. Scott, You got any thoughts on the chart in here?
I was looking at it early this morning. I actually got an alert on it when it cleared 24. It's on my radar because, as we said before, he's a pretty good research analyst, picking up stocks well before the crowd does, and they usually tend to be, double baggers, triple baggers for sure. I did like the price action when it cleared Monday's high above 24, but it's given up some of that gain there with the broader market weakness today. I think overall, I don't know. I think I'm not a fan of buying stocks ahead of earnings, but he tends to like the name. He thinks they're going to do a good job. So if you like to take that sort of risk, then by all means, jump on in. For me, I'd just like to see it, show some confirmed upside, and then I'll dive in that way.
All right, it's 61 million float there, so low float should provide for plenty of volatility going forward.
Yeah.
Touching on a few names here. First, just want to throw out Cenex, ticker symbol CENX. This is an aluminum play. I think it goes without saying that we've certainly seen some concerns rising from the steel names and the aluminum names in this earnings season with the tariff action that's been taken. This is one right near the lows, Scott. So do you have any interest in this from either direction, or are you just going to kind of watch this play out, given the fundamentals behind it?
Yeah, as always, I'm just going to have to sit down and wait for something to develop. I try not to predict turns in the market. This thing's been in a downtrend for a while. I can't even make a higher high here, so I'm not going to really be predicting anything like that.
All right. Next up, wanted to touch upon a Apple supplier here. Actually, there's a few of them, and Tech T's also got them lined out in his preview too. So for a little bit more color on them, feel free. But we'll first take a look at CRUS, Serious Logic, which saw a little bit of a bounce higher, just below its 200-day moving average on the positive Apple results. You looking at any interest with this on the long side? Do you like this build-up in the chart? It's had a pretty nice little upward trend since the beginning of June.
Yeah, the one thing Tech T is really good at is finding out-of-favor stocks that have been beaten down, have lost more than 50% of their value, and then started basing a little bit. And this one fits the bill for sure. So if you like what the company does, and you're looking for some sort of picking up a potential turnaround play, I think Cirrus Logic should definitely be on your radar. It is right up against the 200-day moving averages, right around 43, 44 area, so kind of keeps me away from it. But if it does start clearing that resistance level around 45, it would be back on my radar for some upside.
All right. Next up, we're going to jump into the hacking space here, cybersecurity, with a look at FireEye, which has recently slipped below its 200-day moving average and is fighting to hold that 1550 area for support ahead of tonight's report. I haven't had too many of the cybersecurity names coming out yet, so I'll be curious to see the fundamentals and the environment that it's performing in. But what are you looking at the chart here, Scott?
The chart, if you on a bigger time frame, it's been going sideways for 2.5 years now. 2.5 years it was trading right here as a teenager in the $15 area, and here it is again trading at the $15 area. And that's basically my take on the technicals. You really needed to bust out of this 2.5 year range that's been going on here at the $19, $20 level to really kind of make some sort of turnaround story happening. I know a lot of people like this stock. I've heard so many people bullish on this name. Show me the money. That's basically what it comes down to. This stock is probably one of the most hopeful names I've heard people mention month over month over month and year in and year out. So, yeah.
Yeah, I know I'm a fan of it, but
everybody's a fan
of it. Yeah, hasn't been able to get out of its own way. I mean, they had some management missteps a couple of years back on the sales side of things, but appeared to have gotten it straightened out, but it hasn't really been reflected into the stock, that's for sure.
It's got to get out of this teenager, stigma. It's got to get over 20.
Right. Well, one that has a cybersecurity play that has gotten out of this stigma and has been seeing a really nice run is a name that you mentioned earlier. That's Fortinet, ticker symbol FTNT. I know you love this chart. It's been a nice steady upward trend. And channel checks for this one have been pretty strong according to JMP Securities. They came out with a note a few days ago saying that expectations were strong, but they also were a little concerned about the valuation given the big run that this name's had. It's up about 50% since last October. So you nervous about that run at all, Scott, or you prefer just looking at the chart and not worry about the valuations here?
Yeah, I mean, the trend is your friend, right? That's always been my philosophy, and this one's just been stellar this year, up over 45%. I think year to date here. Did pull back in just recently with a bunch of software stocks into late July month end and challenged the 50-day moving average. I'm going to have to give it the benefit of the doubt that the trend is going to continue higher. If it does not, and you see selling, take hold, maybe you look around $60 to see if that's the first support level. But overall, like you said, maybe this is a name that I'm going to be looking to, have on my radar as potential, buying opportunity. I love charts like these. Absolutely love them. They show up on emerging growth. They show up on liquid momentum. Maybe it's being confused with Fortnite, kind of similar, close to that. I don't know if people are playing that. I don't even know what they do. Like you said, it's cybersecurity or something, but yeah, I love it. Absolutely love it. It reminds me of like a MongoDB.
Yeah. Well, I'd love to see. Still wait for Mongo to pull back. If it's ever going to. Next up is another Apple supplier, Qorvo, ticker symbol QRVO. Obviously, with the Apple results, there's a higher expectation around this one going into tonight's print, one that we're going to certainly want to keep an eye out on. It's been holding a pretty steady channel around that 80 to 85 area since May. But I know you're never concerned about a nice long consolidated pattern like this as long as it's showing some strength. So where would you be leaning on this one, Scott?
Well, it's mid-range for the last 3 months or so it's kind of tough. But the path of least resistance, looking at a monthly chart over the last 3 years, which the stock technically, I think, it IPO'd back in 2016, or 2015. So the path of least resistance would be right above the $86, $87 area. And so I kind of like that a lot if it does start to get back above those June peak or the year-to-date highs. That's really all I got for this one. I'd like to see it bust out over 85, 86. If it breaks down to the downside, I don't know, but you take a look at the 200-day moving averages around 76 to come and play.
All right. Next up, we're going to look at payment system Square, ticker symbol SQ. Another one of those long upward trends on it. One thing I would ask you about, Scott, just to kind of break from the earnings talks right here, and I don't want to take away from Square, as I know that's one of your favorite names, but how do you view, I know you like looking at monthly charts, but what do you do when we've been in an 8-year bull market? And I mean, all the charts are going to look good on a monthly basis, for the most part, right?
For the most part. Well, something about, like, Square is a little interesting, because if you look at the monthly chart of Square, you do have some of these, I guess on a candlestick you'd call them wicks. You do have like some sort of reversal activity going on there during June and July. So the stock's obviously been kind of struggling to this strong uptrend. It's definitely, every time it tries to make a run, it definitely corrects and comes back in a little bit. But at that same time, every pullback is being bought in context of that uptrend. So really what I just described there is a series of higher highs and higher lows. So with something like this, and these stocks have been strong bull markets, clearly they're leading the market higher. They're in favor. The cycles are in favor. The sectors are in favor. The uptrends are still intact. It's just a matter of, and I know this is cliche, but buying low and selling high to profit on them, as long as those channels remain all intact. So for something like Square, I think it's great on pullbacks. This is why I've been a big fan of this one. It's been on Liquid Momentum Focus list for almost 2 years now. I believe it was on Emerging Growth. I think it started there. I don't think it's on there anymore because of the market cap increase. But every time this thing is pulled back, you can just slap on a MACD or an oversold RSI or a stochastic, and as it started to turn up from oversold levels, it just made for very nice swing trades to hold on to for some nice gains. It's treated me very well. I have no idea what they do, but it's treated me very well.
It's payment systems, so, all
Yeah.
fintech, which is going to be an interesting area for a few years to come because, one person talking about the next financial crisis, and, everybody obviously always looks at the banks, but really it's third-party payment providers that I think are the bigger ones at risk, just because they're the ones not being regulated. But anyway, that's for another time.
Yeah.
Next up, I want to take a look at T-Mobile, TMUS here, obviously. Working with the Sprint M&A over there, and the stock's been holding below its 200-day moving average, but we've seen some decent responses from a lot of these telecom providers following earnings. So with T-Mobile testing its 200-day moving average, well, what kind of action would you like to see in this one, Scott?
I gotta be honest with you, I don't really look at this stock that often. Any sort of telecom cell phone stocks, I really just treat them more as longer-term investments because they usually pay nice dividends, and that a lot of people are always, paying their monthly subscriptions because people live and die by their cell phones these days. What's T-Mobile's yield? Any clue if they even pay one?
Let me take a quick peek.
I don't think they even have one. But overall, it looks like there's support right at the 55 level going over the last few months.
Yield.
Yeah. 55 support over the last few months. I'd really like to see it kind of bust out over 62, which was the high there for July, and start getting back above the 200-day moving averages, get above July highs, start getting into that gap from late April, that bearish gap right around $64, and could be turning around and starting a new uptrend. But overall, I really don't pay too much attention to this one.
Okay, here's one that had a huge breakout from its last earnings, ripping above its 200-day moving average when it was at that 40 area, and is now trading just under 60, and that's TripAdvisor, ticker symbol TRIP.
You got long this one, I think, after the last quarter, didn't you?
I did.
You got shaken out by like a penny.
I got shaken out by a penny and then watched it run another 25%.
So this is the poster child for one of my post-earning setups that I love, and if anybody watched that video that I had made like 2 or 3 years ago that I sent a link to early in the week or on Friday, this is what I'm talking about. You get a stock that gaps up, clears resistance levels, usually in response to earnings or some sort of positive news, and it consolidates, and it basically goes absolutely sideways, and everybody forgets about it. And that's exactly what happened in May in this stock, with it just chopping around that $47, $48 area. And then after a few weeks of nobody paying attention to it and volume drying up, this thing just catches on fire, and it just launches higher, and it's just been a really nice grinder for the last couple of weeks. And so going into earnings now, it looks like $55 is key support. If you look back on June and early July. Those are the levels that held. You have the rising 50-day moving averages coming up to meet price today. I would say you have some upside bias overall as long as it stays above 55.
Interesting that you would say that because there is some high expectations for tonight's report. They got some easy comps to go up against, and want to keep an eye on the revenue and EBITDA numbers there, as that's expected to come in higher than expected.
Did any of the competitors report earnings yet? I think Expedia did, right?
They did, and if I recall, they had a decent report.
Yeah, and they jumped about 9%, I think, after earnings.
Priceline is usually one of those off-timing names, so they come in kind of at an odd time. So, yeah, outside of Expedia, I can't recall if any of them have reported yet.
Okay.
But some good expectations are on Trip.
What was the, sorry, before I interrupt you, what was the company we were talking about earlier this week that we said was almost cannibalizing itself with all the different websites, like Hotels.com and everything else? It was one of these other ones. I wanted to look at that one.
Was C-Trip, was it?
No, it wasn't C-Trip, but maybe it was Expedia. You know what? It was Expedia.
It was Expedia.
Yeah, they're the ones that own like 19 Orbits and Hotel.com and everything else.
Expedia had a nice pop on their earnings. They haven't done much since then. Jumped up to 140 and pulled back to that 133 area, but still above the 126 area when they reported. So, that's something to keep an eye out on. I suppose they had a similar rally to TripAdvisor here ahead of following last earnings, ahead of this report. But some high expectations for Trip. So
and there was even a couple of analysts out there that were pretty positive on it, raising their targets. I think at Stifel, and Raymond James even gave it a little bit of an upgrade as well. So TripAdvisor looks like it has potential to move higher here. Like I said, if it holds that 55 area.
All right. Next up, one that I know you've traded a lot, Scott, and one that I'm sure a lot of people have questions about, and that's Tesla. Obviously, a lot of focus will be around those production numbers and the outlook for it. Stocks recently slid below its 200-day moving average. Certainly, CEO Elon Musk has had a combative relationship with analysts over the last couple of earnings calls, so that'll be probably some must-see TV there, just to see how he handles himself. But stock's fighting to hold that 300 level, but it's really kind of in a downward trend, breaking below the 200-day, the 50, the 100-day. That's slipped through all that. What are some of the key levels you want to keep an eye out for, either to the downside or the upside here?
I can't really say if I have any key levels. I mean, obviously, if it was to collapse and break down towards those March lows, which is around 250 or so, that would definitely get me interested in maybe playing a potential bounce in the stock. I think that even though that a gap down of significance would obviously trap all the year-to-date longs in this name, the buy and holders, I feel like people just get to step up and buy this thing on weakness again. This one, it would really have to significantly drop, say, 100 points to really scare the heck out of people. But overall, I think this is definitely an interesting name to watch. For me, this has been the only times I actually trade this stock, really, or it's part of like what I would call the woodshed strategy, if I had to give it a name. Anytime these stocks get taken to the woodshed and they get absolutely hammered, and you see RSI, drop down below 30 into oversold territory, that's when I get interested. That's when I'm looking at these things and trying to play the bounce for 30, 40, 50 point upside and weeks later.
For a guy who's got a lot of problems with people just slapping names on, you sure seem to like to slap a lot of names on.
I'm trying to be colorful here. I can make this stuff boring, It's technical.
You do a good job.
The old saying is, if you're trading right and you're investing right, it's boring. Technical, fundamental, and economic data are boring stuff. Just you got to spice it up a little bit.
Right. And one thing I would like to point out for Tesla that is going to be very important is whether or not the company is expected to reiterate its second half outlook of break even and generating cash starting in Q3. It's going to be really important for this name, so keep an eye out on that moving forward. Next up, we're going to touch upon two more here, Scott, and then I think we're going to bump into the close. So unfortunately, we're not going to have time to get into some of the before market ones, which will include Teva and Wayfair, but we'll adjust them tomorrow morning.
We'll do a lightning round. Let's go, or a speed round. Let's go.
Well, the next two probably, well, maybe they are speed rounds, but U.S. Steel floating on its 200-day moving average, ticker symbol X, of course, and another one where we're going to be keeping a close eye on any commentary around trade, tariffs, and the impact from them.
Yeah, that's it. There's nothing else to say.
Nothing else to say for it.
It's in the mid-30s. We got to get it above these multi-month highs, about $37, $38, or you got to get it below the 200-day moving averages under 34, 33. There's nothing else to say.
Next up will be Wynn, which we kind of discussed. So if you just want to recap, obviously there was some concern over the guidance from Caesars earlier with the RevPAR. So that weighed in on the sector here, and we just saw Wynn. After that initial selling, did hold steady at the 159 level. Yeah. But and what area are you looking at? Obviously, 152.50 has to be glaring, right?
I mean, this chart was doing fantastic in 2017. Even it just became an absolute mess this year, and just too many headlines whipping this thing around. If to the upside, I wanted to get back above the 200-day moving averages around 168, 169, and then even then it's going to be running into the 50-day moving averages around 170, 171. So it's got a lot of overhead resistance here. To the downside, if this thing can't hold this 159, 160 area, I mean, this could easily be dropping down to 150, another 10 points lower.
All right, next up we're going to take a look at Yum-C, which is the China holdings for Yum Brands stock. Right, so a nice spike back on the 26th, which I believe was some M&A chatter going around. But, it's pulled back, giving up some of those gains and holding right around that 35 area at the moment. Any thoughts on this chart going into?
Yeah, over the last year or so, I mean, that's pretty nasty looking chart pattern. I guess that's a classic head and shoulders topping pattern that's been developing. But as always, fundamentals come out and they can just destroy any chart pattern, and no matter how bullish or bearish that might look. So if this stock can get back above $40 and start trading 41, 42, and start turning things around, that would be pretty bullish, actually. To the downside, though, if this thing can't hold this 35, 34 support area, these recent lows where it got real sloppy and starts slipping lower, that's going to be bad. That's going to basically be pretty detrimental for the stock to get down to $30.
All right. Next up, we're going to take a look at Teva. Teva and VRX are two names that have really been seeing a nice bounce back here. I still have a piece of my VRX long at the moment. Teva's, they've been improving their balance sheet and certainly a little bit more positive reaction to some of these generic pharma names. You seeing anything here, Scott? I'm assuming you like the look of this chart to the upside.
I do like the look of this chart to the upside. Long-term downtrend seems to have been broken here this year, and especially the last few months. Price action getting back above the 200-day moving average, back above the 50-day moving average. I like it above 20. And this goes back to that other stock I was talking about. If you consolidate and base in the teenagers for a while, and then you start moving into the $20 area, you reach this whole new realm of investors, and institutional money starts looking at you a little bit more seriously when you're in the above the $20 mark. So I like the upside potential at overall as long as it stays above 20. And God bless you, goes in tight to whoever's sneezing in the background.
I think that was Richard. Next up, Wayfair, 55 million float, and 20% of it short. It's pulled back a little bit from its last earnings. I mean, just had a monster squeeze after last earnings run into the 127 area, but it's pulled back about 20 points here going into tomorrow's print. So, any thoughts on Wayfair?
I've
We
only
haven't seen that short squeeze strategy work out as of late, right?
Yeah, it has been actually. Wait, you have not? You said or no?
Not as much as it was back in when was it, June, when we just continually saw it.
Yeah.
Just flying through. It hasn't had that lasting impact that we saw in like a Wayfair.
Right. So real quick, watch the 100 psychological mark if it drops. That's going to line up with the January. This is February peak. So I'd like to see it there. If it can't hold the $100 mark, you're dropping down to the 200-day moving averages, which is in the upper 88, 85 area. It's a wild stock, though. I've only traded it maybe 3 or 4 times over the course of the last year, and it's just pretty volatile. So it's not really. Just be careful with that one if you're trading it.
All right, and with that, I'm going to jump over and start helping these guys out with some of the earnings. Scott, you going to stay on and just give a play-by-play on whatever you're seeing out there in terms of big reactions?
Yes, sir. Hey, by the way, real quick.